Joining me for today's Target and Focus is Senior FX Strategist at Societe Generale, Lauren Rosborough. So Lauren, this week Greece finally got the news they've patiently been waiting for in the form of a second massive bailout package. In the short term, what effect is this going to have on the euro-dollar? And what are your longer term forecasts looking like at the moment for this pair?
In the very short term, in other words, the next 1 to 2 weeks, we don't anticipate a huge movement in euro-dollar. Predominantly that's because the decision and the agreement was largely priced in by the market. However, uncertainty does remain going forward. The difficulty from here is implementing the strategy. So less so the private sector involvement in terms of the bond swap that occurs on the 20th of March, but more the trajectory for growth going forward for Greece and its ability to remain on track and therefore to reduce its debt to GDP levels. We anticipate that they are likely to miss their targets, and that will have negative consequences for the euro. The ECB also is with the new long-term operations that are occurring at the end of February, that will also assist to weaken the euro. That, as well as slowing growth in Eurozone as a whole, as well as not just peripherals, but also in core economies, is likely to see euro-dollar fall towards 120 by the middle of the year, and only bounce, towards the end of the year, moving into 2013.
What about pound dollar? The cable has been capped at around the 159 resistance level since the beginning of the year. But at what level do you foresee the pair trading at in, say, 1 month, 3 month and 12 months' time?
I think what's quite important for sterling is to look at not just the sterling or the pound against the US dollar, but also against other currency pairs as well. Because what we're seeing at the moment is Europe, the UK, the Fed, and now also the Bank of Japan are expanding their balance sheets or undergoing some form of quantitative easing. That has had downward pressure on its exchange rates. So it is sort of a fight to the bottom, as it were, amongst the G3 or G4 countries relative to the rest of the world. But if you look at, for example, the UK, the pound versus the US, we anticipate it to continue to depreciate towards the middle of the year, a very similar trajectory to the euro, and then to bounce at the end of the year. But relative to the euro, and that's when currencies matter, it's all relative game, sterling is actually going to outperform some currencies such as the yen, such as the euro into 2012.
The 2-year inflation outlook from the Reserve Bank of New Zealand dropped to 2.5% in the first quarter. Now, the tepid pace of inflation has given Reserve Bank Governor Alan Bollard room to keep interest rates at historically low levels, and some analysts are pricing around 17 to 19 basis points worth of hikes over the coming 12 months. How does this sit in line with your expectations for the Kiwi dollar and its performance over the next 12 months?
New Zealand is in a quandary at the moment. It's in the midst of having funding pressures from Europe in terms of its mortgage market, because a lot of its mortgages are funded offshore. So spreads have certainly widened, and that has limited the RBNZ's ability to raise interest rates. That said, there's also momentum in the economy building, which hasn't yet come to the fore. Following the Christchurch earthquake of last year, the expectations were that the rebuilding will have already started in that area, and in fact, continuation of earthquakes has meant it's been pushed off to 2012 to 2013. I think it's a fair assumption that the markets are assuming perhaps we may see 25 basis point rise in the OCR by the end of this year. But I think the bigger picture for New Zealand is that relative to Europe, relative to the UK, it has strong fundamentals, has strong financials, and at some point, although the timing is uncertain, growth will start to build momentum going forward. Coupled with relatively high interest rates, our New Zealand dollar is looking rather lofty. Now, we anticipate, once again, there is a dollar effect here, that the New Zealand dollar will depreciate somewhat towards the middle of the year, and then appreciate towards the end of the year, ending at around 82 cents against the US dollar. But on a cross basis, compared to most G3 countries, New Zealand is anticipated to outperform well in advance of most economies around the world for 2012.
Thank you for that, Lauren. It was great to have you on the show. Now, stay tuned for more upcoming market news, but for now, goodbye.